Well, good evening, everyone. You're listening to Red Pill 78. I am the corruption detector, and this is your Red Pill News. Joining me once again is my good friend Bob Kudla from Trade Genius Academy. Bob, how are you, my friend?
I'm good, Red. What's going on?
Oh, not much. I'm just hearing all this news about Powell and the Fed. It's getting me a little bit nervous, so I thought it was a good time to bring you on. Did you want to tell the audience about Trade Genius before we get into the meat of the articles?
Oh, sure. So at Trade Genius, what we do is we educate and inform people on how to trade the stock market, cryptocurrency market, and actually even in the forex market. So we have trade signals, we have trade indicators, we have training programs, we have trading rooms, and what we do is we created algorithms that look for buying pressure and selling pressure, and try to put our subscribers and our students in the right sectors and in the right trades so they make money nearly every day in the stock market. And we do quite well. In fact, I sent you over some of the trades and some of the comments from some of the people that trade with us so that you and your listeners can get a sense of who we are. And then, as we do always, Red, we put together some specials together for the 14th of December where we pre-discounted some bundles for everybody, and they can take advantage of trading with us at a really, really good price. So thank you for letting me do the pitch.
Not a problem, not a problem. And just to clarify, is that from the 14th through the end of December, or is that just for the weekend?
Oh, just till the weekend, just till the 14th.
Oh, just until the 14th. Okay, great. All right, so like I said, this stuff about Powell and the Fed, it's got me real nervous. I mean, I see him and Trump out there butting heads. Trump's telling him to lower the interest rate to zero. Powell's obviously not going to do that. And I've got a lot of friends who are in the financial world like you, and they've told me that they think we're already in a recession. That it's not a matter of getting there or, being afraid of getting there. Like, we're already there. Do you think we're already in a recession?
I may have a divergent opinion on that. I think what we're gliding above that path, and the reason why we're not in an official recession is because of all the money that they're throwing at the system. The debt that's being accumulated is keeping us out of a recession at the moment, and we probably won't be in one all through 2020. When we get through the election, then all bets are off. However, what the Fed is doing, which get everybody really nervous, is they've kind of given up, and they started this repo madness. I think you and I talked about this last month, where they're just throwing money at the banking system because a lot of their customers are over leveraged, and they're just going to throw as much money in as they possibly can to save the banks. And at the same time, Powell said that he's going to let inflation run a little hotter than normal. And today they announced that they're not going to reduce interest rates all through 2020, but they said it would take basically an act of God for them to raise interest rates.
Okay.
And so immediately gold and silver and the miners, which we've been expecting this for quite some time, they leaped at that news. And now what we're going to see is that the yields of the bonds are not going to support gold and silver prices this low anymore. So now we're going to see probably all through 2020 gold and silver prices going higher, and you're going to see the miners going higher. But unfortunately, you're going to start seeing the cost of going up as well. Oil now is pushing up around $60 a barrel, and that's like a tax on people. And in addition to all the other inflation that they push through the system with healthcare and whatnot, all that's going to combine to cause a pretty nasty recession, I think, after the election. I think they're going to try to keep this thing cobbled together until then, and then all bets are off.
You don't think that they try to push us into a recession before the election in order to kind of, give Trump a kick in the pants?
I thought that last year, but I think the Democrats scared the bankers so sufficiently that the Trump's the devil they know versus the devil they don't know with the crazy talk coming out of the left. And you can see it. There's a lot of recoil there. That's why Bloomberg's jumping in. You see all these billionaires starting to get engaged. They're really worried that the socialist wing of the Democratic Party could take us to places unknown. And I think they're probably thinking that, hey, look, Trump probably has this in the bag, And why antagonize a guy that doesn't have to run for re-election again after he's elected next year? Because, he has nothing to lose. So that's my speculation. And I think Trump trumped them, if I can turn a pun. He was always ahead of them. And every time they did this to George Bush 1, and you probably remember this, Red, where they basically set a trap for him and kicked him out of office so they could bring Clinton in. Trump was too smart for that. The minute they tried to play that game, he jumped out in front of them, and he's not let off the gas the whole time. So and same with the impeachment thing, any kind of hiccup in the market or the economy is going to pin right back on the people they don't want it pinned on, and the bankers do not want this attention. And I think they've just now given up. They're basically saying, they waved the white flag, saying we're going to do absolutely nothing in 2020, not lower nor increase, but they're going to repo as much cash into the banking system as the bankers request worldwide. People don't realize that there's 19 banks in this prime broker environment, and many of them are overseas. It's not just U.S. banks. So, they're going to flood the world with dollars. And you start to see the dollar started to wiggle a little bit today on the news.
Yeah, I saw something about it dropping. Why is it that the Fed is pumping money into foreign banks? I mean, don't other countries have their own Federal Reserve or a federal banking system they can go to?
Yeah, but let's set the conspiracy theory aside for a second. So these banks are required by law to buy U.S. government bonds.
Oh, okay.
So they get a benefit from that burden by being able to come to the window and trade those bonds in back for cash. And the other thing is the U.S. dollar is the world reserve currency. So it's in the United States' best interest that the dollar is being used to settle trade activities and actions. So that's why they get to do it. What we don't know, and what I think caused this problem in 2008, is we just don't know some of the deals they do that they don't tell us about, Red.
Yeah.
Where they give loans to people that we don't necessarily know about. They'll use offshore, off-balance sheet kind of activities. But yeah, mark my words, HSBC and Deutsche Bank, they're part of that prime broker network. They're getting dollars. They got to swap it for collateral, but they're allowed to determine what the collateral is worth. That's like you and I go into the bank and say, hey, I own this house, it's worth $1 million, and it's only worth $100,000. But if you're a bank, they don't question it. You and I, they put you through an examination and an appraisal and everything else, but they'll accept the bank's stated value. And that's what happened in 2008, where the banks just gave collateral to the Fed and said, hey, it's worth what we paid for it. And the Fed said, yeah, wink, wink, we agree. And then they just waited for them to inflate the prices back up again so they could take it off the books. This time they're not going to be quite so lucky because the debt is become enormous, and there's not enough collateral in the world to be able to cover it up. So at some point they're just going to run out of runway, but they could keep this going though for a while. The United States debt is only 100% for GDP. I know it's kind of weird, but China's 3 times GDP. That's like the U.S. balance sheet being $66 trillion, Red.
Wow.
And it's only 4. Okay. So now I'm not saying that's a good thing or a bad thing. I'm just saying perspective is that you could see our Fed have a $15 to $20 trillion balance sheet, before this blows up on them. So there's a lot of room for them to hide a lot of things. And their hope is that they can get these loans under control before inflation overwhelms everybody. And, and energy and food are the one things they really can't control. So people need to keep an eye on that. That's what will kill the Fed.
So how do they do it? I mean, what would they be looking to pump up? I mean, like goods and services? Maybe you said we can't do energy and fuel, but I mean, what is it that they could pump up in order to get more money out of us and into the system?
Well, what they can do is that they can just start offering cash for clunkers. You remember that?
Oh, yes. Okay.
Or they can allow our federal government to print an additional $1 trillion in debt that the Fed will buy. And they don't buy it directly. They buy it through the banks. So what the banks do is the banks go ahead and they buy the debt from the Treasury, and then they turn around and they hand those Treasury notes back to the Fed. and the Fed keeps them on the balance sheet, and the banks get their cash back. And so that's part of what's happening here. So we've been printing such a deficit lately that the banks had all these treasuries, but they had no cash to lend out. And if people wanted their money, and that's what's been happening. So hedge funds are out there speculating in the stock market, but people out there are withdrawing themselves from the stock market. So there's a shortage of cash. So the Fed had to come in and say, I'll take whatever assets you have on your books, and you could swap it for dollars so that you can give it to your depositors so that they can get out of the whatever it is they want to get out of. At some point, they overwhelm the system. You just can't give enough dollars out there because the debt is overwhelming the collateral. And that's when it all ends. But the United States has a runway. China's done. Europe's done. Japan's done. It's all on us now. And that's when you're starting to see, when Powell kind of gave up today, you're starting to see people saying, huh. And I sent you some articles where, look, central banks are buying gold. The rich are buying gold. The banks are buying gold. And we better be buying gold. Okay?
Absolutely.
You don't listen to what they say. You watch what they do. And at Trade Genius, since we're traders, we can make more money trading the miners that own the gold and silver because you get leverage. And this is where you can make 4 to 8 times your money. Gold doubles. You can make 8x if you own the gold miner. And so that's the play. And it's happened before. This is not like a new concept. We did it in 2011. It happened at 2000. So when gold and silver get these spikes, the miners just go absolutely crazy. And it's just an incredible opportunity to make money, and then take that money and pay off what debt you have.
Yeah.
So that you can kind of ride this storm out in some sort of relative fashion, that, you know, when this thing hits, you're not caught with collateral yourself that you can't get rid of and to pay debts. You've already taken care of it. You're ahead of the game.
I mean, the idea that that's possible is just crazy to me. You know, I mean, I've never been much of an investor, and that's just by matter of necessity. Like, I haven't been able to. But I mean, we talked about this before, and you can get involved for a relatively low fee. And everybody's talking about gold and silver. You know, I mean, it's all over YouTube. I see it on the news. I hear people talking about it every day. You know, people that a couple years ago never would have even, you know, raised an eyebrow at precious metals. Is the increasing cost of precious metals due to the fact that so many more people are buying them?
Yeah. So in 2011, everything spiked, and then the Fed kind of calmed everything down. They pushed the price of gold and silver down. And then when Trump got elected, not because of him, just the timing was the same. In 2016, you started getting a reawakening because people are realizing, hey, well, maybe these debts aren't going to get paid back, and they're going to try to inflate this away. So we're probably like in the third inning of this. There's still people out there, if you control the internet and the financial boards, that people think gold's going to be cut in half. But I assert to you that the marketplace is saying it's likely to double. And so, you know, when you have billionaires buying gold and silver, and you have the banks and the hedge funds and the central banks buying it, those people are more in tune than you and I are. You know, I don't have to know that. I just have to know that they're doing it. And that gives me enough of an inkling that I better be positioned. And you can see the buying coming into these stocks. So, yeah, but I mean, the good news is that, look, we're only in inning 3. You know, it's not like Bitcoin already got to 21,000, right? And everybody rushed in and then it dropped. This is in things like buying Bitcoin at 4,000 on its way to 20,000. You know, there's still a big move in front of us. And it's going to be a grind move. It's not going to be like tomorrow you're going to miss it. I mean, it's going to be inexorable. I mean, you're going to see gold's up again, gold's up again, gold's up again. And you're going to be able to make money on this thing probably for 18 months to 2 years. It's going to be a really, really good trading environment for these assets. Other assets, not so much.
What do you see for the other assets? I mean, are they going to lose value, or are they just going to have the bottoms drop out?
Yeah, well, what's going to happen is people are going to shift their money. So you saw that the bond yields went down. You and I were talking about that before we got on the air. Is that, look, when people get scared, they actually buy U.S. government bonds. Ironic as it is, because it's safer than anything other bonds out there. And so the other thing people do is they think that their fiat is going to be worth less. They're going to buy hard assets, and that's what's also happening. So those two assets are going to do well. What's not going to do well are assets that are considered financial assets, like the highly speculative stocks, in tech and things like that. They won't do so well. What people don't realize is that probably, I think I saw this, and I could be wrong, but I'll say it this way: a majority of the S&P 500 cash flow doesn't cover the interest costs that they absorbed by buying back their stocks and taking out loans. So the company's ability to create this scarcity that drove stock prices up is going away. At the same time, people are moving their money out of the stock market per se and into more of these hard assets. And then the stocks that are part of hard assets are going to go up, Red. If the other stocks are going to go down. This would happen in 73 and 74. When you saw the stock market was down 45% over a 2-year period of time, but gold and silver miners had a heyday. Oil services companies had a heyday. But, the Nifty 50, they called it, this was the FANG stocks of the day. They got decimated. So it's really a matter now of a total shift. At some point, it's going to be bailout completely. But right now, it's a shift. You get the shift into hard assets. And hard assets are unbelievably cheap compared to the stock market today. And it's just a tremendous opportunity for people who are paying attention and are watching and been waiting for this event. And it's occurred.
What cryptos do you like that are out there? Because, there are so many, and obviously we know Bitcoin. I hear that. Monero, Litecoin, Ethereum, that kind of stuff I know about. But, there's so many, and I would imagine you guys are watching them. So.
Yeah, we are. And I trade more on the stock side, and my partner Phil trades more on the crypto side. So we can do a session on crypto detail itself. Just needless to say that Bitcoin's the king. And the halving is coming. Number one, the cost of them mining for new coins is going up, and China is trying to cut themselves out of the market. They've already put a kibosh on getting Ethereum transactions through their firewall. So that may cut a whole lot of supply out of the market. But I'll say from a macro standpoint, the coins that I think are going to do well, besides Bitcoin and Litecoin, is coins that will complete transactions. They're the ones that will automatically forward payment when work is done. Those are the coins that I think people are going to find the most interesting, because the trust level with trading partners is going to fall. So therefore, the coins that will escrow and then they'll push out the payment will do fine. But other than that is that, me personally, I'm a Bitcoin Litecoin guy, and that's how I trade it. And but I can maybe in January, if we talk again, I can do more of a detailed diagnosis of what I think are some of these secondary players for us to trade.
That'd be great.
Yeah, now, I don't want to speculate.
Oh, you're fine. It just came to me off the top of my head. I had heard some months back that the U.S. government was going to label cryptocurrency as one of the official commodities. So then it would be recognized, and then it would be easier for it to be used. So they could count it as like a type of wealth. I don't exactly remember what they all are. I know it's precious metals, I believe bonds and stocks, hard currency, but that Bitcoin was supposed to be added. Do you know anything about that?
Well, I think what they're struggling with is Bitcoin a security, or is it a currency? And I think right now they're leaning towards the coins themselves being more of a security than a currency. So I think there's still a battle between who's going to be in charge of regulating it. And basically right now it looks like anything that's coming new to a coin is really treated as a security. So that's, I think, where they're leaning right now. Because you got to realize, a lot of people would really hope and pray that Bitcoin could be basically a borderless currency, not controlled by anybody, but it doesn't trade enough volume yet. So it's still treated more like a speculation, or basically a store of wealth, like art, where only 20% of Bitcoin actually trades. Most people have hodled it. And so I think for it to be treated more like a currency than a security, but it's still considered an asset because if you make money off of it, Red, you pay taxes on it.
Okay.
So if it's a currency, then as it trades and goes up, and as a dollar gets more valuable, we don't pay more tax on it. So, but when you speculate on Bitcoin, you pay tax on the gain, and you get to forego tax on a loss. So
Okay.
that's kind of where it is at the moment.
Now, one of the things that I always see with cryptocurrencies as kind of a barrier to it, being more accepted, is the ability to use it just like regular currency. Do you think that we're any closer? Are there any emerging technologies that are coming out that are going to maybe change the way that people use cryptocurrencies, so you can just walk into a store and maybe slide your debit card, but it's your Bitcoin card or something like that?
Yeah, I think that's what Litecoin thought they would be. Bitcoin still probably not enough people use it, so they thought probably Litecoin. I know Ripple, XRP, thought they would be basically the transaction engine for a lot of these transactions, but since they're a centralized coin, they really have a limited role in more and more like bank to bank transactions and cross border transactions. So nothing has really jumped out yet, and I think probably the stability of the pricing probably has people a little put off yet. Like if you were going to pay me in Bitcoin and today it's 7,000 and tomorrow it's 7,500, right?
Yeah.
I think people have a harder time, trying to arbitrage that. So I think a lot of people are looking to try to create these stable coins, where it doesn't move around as much, but it kind of rises over time, kind of like gold does.
Mm-hmm.
But from a day-to-day, week-to-week standpoint, people are going to be able to use it to pay bills or to run a business. But when something's swinging 2 or 3% a day, it's really more of a speculation tool than it is a transaction tool.
I mean, that's definitely the biggest reason that I haven't used Bitcoin to do anything, is that I see that price just swing in one way or the other. And if I was to, pay somebody for a good or a service on one day and then the next day it's gone up like 10, 15%, I would feel really stupid for choosing to do it that way,
Yeah, but from a trading standpoint, it's just a beautiful thing.
Yeah.
I mean, you can make more money in a month trading Bitcoin than you can in the stock market in 2 years.
Yeah.
If you trade it right. So, from our standpoint, we're quite happy. We're pro gold, we're pro silver, we're pro crypto, because we think those are the right things to do for a stable society. We think the fraud with the banking system and the counterfeiting, creates distortions and winners and losers that are politically connected versus economically connected.
Absolutely.
But it's a great tool to trade, and you can make a lot of money. And we have tools to do it. I think one of the things I showed you was, the profit ribbon that we have. It's great for cryptocurrencies. And I mean, the guys over in that room, they're 400 or 500% a year got trades right now, Red. So they're doing quite well. And you could trade. The nice thing about cryptocurrencies, you can get into it. If you have $100, you can start trading crypto tomorrow.
Yeah.
If you have $200, you can start trading with us at Forex. They got rid of the commissions for stocks and ETFs and options, so you can get into that for less than $1,000. So it's never been a better time for a new person to trade, to actually try and see if they can make a go of it trading these assets, because they're eliminating the hurdles of getting into the game.
That's awesome. Just to be clear, can you explain to me what Forex is? Because it's a term I've heard quite often, but I don't know that I'm real familiar with actually what it is.
Yeah, so what Forex is just currency trading. So, and how we trade it is we trade it with a service called Nadex, which is binary options. And so basically, if you have like a sports bet, like you bet like, hey, the game's going to have more points or less points. That's kind of how it works.
Okay.
And so we have an algorithm that evaluates every currency pair trading every hour. And then we are able to provide that information to our subscribers and our students to say, hey, this trade here is likely to be a winner for you at a high enough confidence that on our currency trades, we're 94%.
Wow.
So we've have over 500,000 historical transactions that we've accumulated over 10 currency pairs over 10 years. So we have a lot of data that tells us, every hour how these currencies should move. And then when they make a move that we like, we go ahead and we make those trades. And the nice thing about it is the risk is extremely limited. So it's not like you're out there speculating with your mortgage money, right. But the profit levels are high on small amounts. And over time, you can build small accounts into really, really big accounts. So that's how we trade Forex, a very, very defined risk and high factor for profit.
All right. I like the sound of that one. One more question, Bob. Are you familiar with the concept of Gesara or Nesara? It's this idea that there's some type of a currency reset that's going to take place across the globe, and it's going to wipe out debt.
Yeah, I've heard that rumbling around a lot. In terms of are we going to have a debt jubilee, or are they just going to reset government debt, or how's it all going to work? And at some point, they're going to have to do something like that because the debt's unpayable. And I think that's why all these governments now are just spending like there's no tomorrow, because they may know when the deadline is. But I will assure you this, it's going to happen overnight or over a weekend, and so people aren't going to be able to get in front of it. And so you definitely want to hold hard assets of some way, shape, or form, or own companies that own hard assets, because it's going to come just like Roosevelt did in 1933 when he basically nationalized gold and then repriced it, but he took your gold already. And so I think that's what we're going to see here. Basically, this debt jubilee is going to benefit the rich and the elites. It's not going to be a debt jubilee for you and me. It's basically going to allow the governments to start spending again, in my view, unless they totally lose control over everything, and then we're all starting from scratch.
Yeah, I think that makes a lot more sense than the stuff that I've been hearing about online. The tidbits that I heard online had something to do with like the currency of Zimbabwe or the Iraqi dinars. My father, who passed away 10 years ago, after Gulf War I, he bought $5,000 in Iraqi dinars and never went anywhere. It was a coaster by the time he had passed away. No good.
That is so funny, Red, because people ask me a lot about that before. I was in the Marine Corps. I got Saddam Hussein bucks right over here on my wall, and but people ask me if I was getting Iraqi dinars. I think a lot of it had to do with, I think people are speculating about, hey, that part of the world has all the oil, Babylon the Great, the dinar is going to be the reserve currency because they're going to control all the collateral in the world. But then, we discovered fracking.
That's exactly it.
And there's oil and gas everywhere. You can put a straw in the ground anywhere and it's going to come out. And so I think, and now we're going EV everywhere. And we're going to have an electric future, which is going to be really fascinating. And so there's going to be a whole new set of winners. So maybe that whole thing went out the door when they realized that even Sweden has oil. Okay.
That's right. Oh, Bob. All right. Well, thank you so much.
I love me good conspiracy theories, but some of those I don't think are there. The scary part of the ones that are true that you didn't think were going to be true.
Yeah. We've seen a couple of those come true very recently. It looks like they actually did tap Trump's wires. But we knew. We already knew.
Yeah, of course. Yeah, I only can control what I can control, so I'll focus on the economics.
There you go. Perfect. You keep all the other conspiracies to me. All right, Bob. Well, thank you so much for joining us once again, Bob, and we will see you next time.
Hey, thanks so much for having me. Merry Christmas.
Merry Christmas to you too, sir.
Bye-bye.
Bye-bye.